Hi everyone, welcome to the Digital Fifth Fintech Show. Today we have with us Shachindra Nath, who is the Executive Chairman of UGRO. UGRO has started very differently. It started with a lot of funding upfront, with a lot of focus on SME lending itself. And since last 2 years, they have done fabulous job by focusing on technology on one side and providing right solution, and focusing also on the segments and providing optimistic or other optimal solutions to the segment, right? So I think very different way of doing it. And again, with 1,000 crores funding, I think they came with a bang, and everybody talks about it. So thanks, Sachin, for joining us. Before we start, I think I wanted to quickly get a brief on what UGRO is all about and some insights about the company and what they're doing.
Yeah. No, thanks, Samir. And thanks for reaching out in these times, actually. UGRO, the way I define what we call it's a culmination of aspirations. In my long 30-year journey as a professional in financial services and outside that, I have come to realize, and this I keep saying, that in India, Saraswati and Lakshmi don't sit together, right?
Okay.
And the way reason why I say is that, historically, if you're blessed with Saraswati, you are expected to ask Bhiksha, right?
Yeah.
You're not expected to be blessed with Lakshmi, which means that if your prowess is towards knowledge, education, intellect, don't try to be wealthy person. So UGRO, the reason why I call UGRO is a culmination of aspiration, that we want to break that myth. Because I have been very a sufferer, as well as being very, very frustrated with this fact that it's only the capitalists who feel that he has the right to build a large business in India. And I wanted to prove that wrong, that knowledgeable, intellectual, hardworking, middle class people can also build a sizable institution. So this is the background of, how UGRO got set up. uh, but when I left from my last organization, wherein I fought a big battle, I was thrown out from there. And when I came out, I realized what is that, in financial services business you need, and what is the reason of major failures. In a country like India, you will find that no financial institution have ever failed because of the quality of the business. It is only a matter of relative performance. So HDFC's ROEs is superior to a, say, IndusInd or an RBL bank, or so on and so forth. It's a relative performance issue. The failure is predominantly of governance. Wherever there is a lack of governance, there is a failure, right? So that was the first. Second, is always the issue of conflict, and that's why I said, we will set up a business which is, there is no conflict, there is no large promoter, there is no adjoining businesses. It's a pure play institution only funded by institutional capital, wherein you are driven only by giving return to those institutional investors. There is nothing else. Third is perpetuity. One of the core problem of institutional funded business, especially private equity, that you do it those businesses for a very short tenure, 4 year, 5 year, because those investors have to take an exit. And that's why I said I will do it in a listed company format, raise all large capital in that, so that these investors exit is divorced from the entity's
I
sale or exit. So build this business for perpetuity. So UGRO was built around these three core pillars: perpetuity, high degree of governance, large capital base, and a very entrepreneurial management team which is driven to build a value and leave a legacy and institution. So that's what the background of the business is. Second, in terms of what we wanted to do, reflecting back, our view is that in lending market, banks have role to play and NBFCs have role to play in India. NBFC, fintech, I take that what called alternative lending spectrum
Mhm.
between consumer, small businesses, and wholesale. The space of the small businesses, and some of this is my personal background, because I spent first 5-7 years of my life in Mirzapur, used to work in corporate industry. So I've seen, unlike typical financial services professional, I've seen it ground up, what happens in the real market, right? Our view is that the small businesses in India are not serviced, while on fundamentally, obviously, it's a massive gap of $600 billion, right? But the reason why they are not funded, and I give this example, which is a very straight, simple example. Think of a large bank's underwriting officer visiting a dentist and visiting an IVF clinic. He will end up asking the same question to both of them. Sir, how many customers come to you every day? In an IVF clinic versus a dentist, the number of patient or number of customer have no relevance, right? IVF clinic per customer value may be much higher versus dentist. So I think so this sheer fragmentation doesn't allow large businesses to service the need of a small customer. And we wanted to change that by, by building deep specialization, using deep technology, and creating a underwriting platform which talks to each of the sub segment of the customer directly. So that's why we did 3 years of research work. We focus on only 8 sector in the small business market: healthcare, education, food, beverages, hospitality, light engineering, auto component, electrical equipment manufacturing, hospitality. Within that, we do only sub-sectors, which is around 38 to 50. So for example, in education, we only do K-12 and play school. In hospitality, we used to do banquet hall, restaurant, fine dining. Let's see what happens after COVID. We in healthcare, we only do small nursing home, pharmacy, dental clinic, so on and so forth. And then we have built some form of a very unique technology platform to service that need. So our journey has been well. We raised around 900 plus crore of capital in July of 2018. We sat on capital for 1 full year. We built technology, management team, process. We started our business in April of 2019, and we have taken first time halt on that in this after completing 1 full year.
Okay. And are you, just difficult one question, are you still lending in some segments?
Yeah, no, so not right now. So because it's very difficult to lend currently at this point of time. But fortunately, I think I keep saying we are blessed. God has been very kind. Given that we have no liquidity problem, we have no leverage, we have very small leverage. We have the ability to extend credit to the to customer right now as well. So, and also because we are very digitally enabled, so we, everything we can do it digitally. So last 20 days, our focus was to first make sure that people are safe. Our customers' well-being is checked. So we spoke to 85% of our customer. Our process are now managed from home very effectively. So being cloud enabled, so we were able to do that. Now we are trying to build a program which is called Sanjeevani, and which has got 3 steps. We want to lend during COVID and first 3 months post COVID to what we call essential services small business market. New customer as well as our existing customer base of 7,000 plus customer, can we lend to them incrementally? That's one part of our business which we are trying to build a program. And second, what we call sustainability finance. So wherein we think the margin of the cash flow of the business was very strong pre-COVID. Can we extend an additional credit to them now with a term facility so that they can keep paying their employee force rent and so on. So both these programs we are trying to work and talking to multiple banks to extend credit to us for that, so that we can start disbursing next month onwards.
Maybe another link question because of moratorium. So how do you see the customer behavior on the lending side will change over next maybe not just 3 months, maybe long-term perspective, both from one moratorium has already come in, and then other side is their income has come down dramatically and many segments are not working. So any permanent change in behavior you see as of now?
So look, I think so there is this wrong presumption that if you give a moratorium to a customer, he will get prone not to pay you back, right? And I think the people draw this correlation from microfinance industry,
Correct.
but you have to necessarily understand. I think so genuinely in our country, except the bottom of 5%, 95% of people are fairly honest, right? Whatever they want to, whatever they borrow with the intent to repay it back, and they think that as a liability, right? Not being able to pay back is a massive pressure socially onto them. The reason why in microfinance industry, once you give a moratorium or when a breakdown like this happen, the guy is not being able to pay because his repayment is designed around his daily income cycle. Once
Correct.
a daily income cycle breakdown, it's not that the guy, when he will go back to the work, if he was earning 100 rupees a day, he will start earning 200 rupees a day. He will still earn only 100 rupees a day. So he doesn't generate that additional capacity to pay back for the past, right? That's why in microfinance industry this problem happen. In a small SME and micro SME business, the guy would generate fresh cash flow. What he needs is a longer tenor. What loan he was supposed to give in 6 months time, now he'll be able to pay in 9 months time. But I don't think so his intent would change just because there was one moratorium came, because end of the day his credit profile get affected, which means that his future capacity to borrow get affected. Unless he's not shutting down his business, he would come back and pay you, and that's for sure. I don't see that's a challenge.
So I think what you're saying is that SME business from a lending perspective will continue to be viable. And I think there's some thoughts that maybe at least short-term loans segment will not do well. You believe that, or on overall basis, SMEs are still there, and we should still bank on them for supporting them through our lending, right?
There are two part of it, Samir. One, you should know that out of the total SMEs in India, only 10% of them have availability of credit, right? 90% still have not got credit, and they survive without credit in some form and shape, right? So
Right.
that is the underpenetrated market. This balance 10% who have got this credit, they would continue to need credit unless you are not uh, drawing for a doomsday scenario, right? So humanity still believes that the coronavirus and or COVID-19 at some point of time would go away. When it would go away, the business would restart. Cars would still run on the street. People will start going back to restaurants. People will still go take less to begin with. Will take airlines. People will manufacture shoes. We will consume things. So the ecosystem economy would come back. And who does this? So 30% plus GDP of this country is done by SMEs, right? They would still need the same working capital. They need to buy goods, manufacture, and sell to somebody. So I don't know on what basis we can presume that the small business financing would not be there or would get it. Obviously it would get affected in short tenor. It is about the combined ability of the lending institution, banks and financial institutions, regulator, and ultimately government to figure out a way that how do we extend this so that the same guy should be able to repay it back over a longer tenure.
Okay, sure, sure. I think the since you started operation only a year back, and now we have this challenge ahead. So, how did you sort of transition to this stage in terms of working from home and other things, and how are you handling and coping with this change on a long-term basis?
So I think so. Look, sometimes you don't design for or you don't plan for things like this, right?
I agree. I
Yeah,
agree.
but some of this happens just naturally. And so if you look at us vis-a-vis any other player, right? So 5 years, 7 years back, or if any other organization, we would have been in big soup because we used to own these big servers in our offices. We used to have physical infrastructure, all of that, right? Digitization. So conventional banks, NBFC are in the process of digitizing their process. We started only a year back, and we started everything to be digital only, right? So we have no physical servers. Everything is on the cloud. The entire process, underwriting, risk collection is all digitized. So it was actually it is amazing that we came to realize that why we used to go to office, right? Why the same job which we are doing at this point of time sitting at our respective home, we have to all travel 2 hours every day, sit in one office and do the same job, right? And this is just our human behavior of the how we act and do things. So actually our transition to work from home was very, very smooth just because we are 100% cloud enabled. We are 100% digitized. Some of our processes which are disbursement related, for which we have to do physical thing, we have to figure out a way once this would open. So I don't think so that's a challenge at all. What it would change for future, right? I think so what it would change for future, as I know, I was telling you that I think so the our human memory is very short, so people I think would forget it and we'll go back to the same conventional way. I, along with my team, have made this commitment to ourselves that some of the learning which is coming now, we will make it as a part of our life, right? Which means that some of the risk exercise, some of the credit exercise, some of the things which for which we, or for example, we are yesterday we decided that one of the big resistance or this thing is that so we said going forward next 2 years we'll increase the population of female population in our company to 30%, and we will offer a work from home model because we came to realize that roughly around 20% of very high quality female professional had to by force go off the professional career between the age of say 30 to age of 38, when they go back stay at home. Can we not offer them an working model from home? And that's what we now, so our HR is now building that. So we will take some of these learnings and implement that in our businesses for sure.
And I think it will also have an impact on the cost side. So while we will have a revenue issue, I think cost side will be better off because maybe we don't need the office in the right place in center of BKC. We have to migrate to maybe a different place. any more local in nature, right? So either you stay at home or come to a place which is nearby your place where you can collaborate, right? You don't need to go to the center of the city and spend so much of money on it, I guess. And maybe the employee cost, do you see the employee cost will also change? Because in last, with so much of boom, the salary levels have just gone sort of past anything. And it was difficult to be honest with you, to create an ROI at an individual level, because the salaries everybody expected was bizarre. So do you think that the expectations coming back to normal will also help in business to come to get revived?
It's dependent. It varies from business to business. For UGRO, my philosophy have been that at least the biggest pool of the cost is top 20% in any
Right.
organization, no? Not bottom that, right? Uh, in at least in UGRO, I have followed this philosophy that the top 20% should come and be part of UGRO for their entrepreneurial drive. And this is just not mere word, right?
Hmm.
So when this business was founded, 8% of equity was given to 44 people, right?
Wow.
So that level of depth of equity ownership we created. With what single vesting condition, right? Or two vesting condition, which is a return on asset and asset under management, which they have to achieve in year 4 and 5. All the senior management, CEO minus one, came on a 3-year lock-in contract. So they cannot leave their company prior to 3 years. And top 50 people, we committed ourselves that will be joining this company on a zero increment basis. Right? So we will not give them any increment, and they should join this company only for basis of equity and the long-term incentive which we are creating. The reason why I said that, it's a culmination of aspiration of a lot of financial services professional was not just, it's not just mere word. So I've tried to put all of this together, right? So once you do that, it's a very hard thing to do, but once you do that, I think so people take care of themselves, right? I keep saying this whenever I stand in front of my team. It is important for us to succeed, because if we will fail, then nobody else, some people like us, somebody else who have the same desire would not have the same courage to do it, because our failure he will treat as his failure. He will say, we are not designed, or we are not eligible to do that. Right. So that's why, I keep saying that our success is, we have to create a new generation which think entrepreneurially. That's why our success, we have a much more bigger mission. So I think so this whole issue of cost is actually irrelevant. I think you have to just create
Yep.
that, yeah, the way you want to operate, right? So
No, I think, and maybe the other point is we are from that generation. You're right. You talk about entrepreneurial journey. I always remember that whenever I would speak about starting on my own, and I'm talking about way back, maybe 20 years back, I think my mother will always tell me that,
mm,
यार ये तुमसे नहीं हो पाएगा, बहुत सीधे हो, तुमसे नहीं होगा.
yeah,
I think we are never taught to become an entrepreneur,
absolutely.
and I think good that the new generation is sort of picking up
Yeah.
differently. The question which I have for you is that what will be the advice you will have for entrepreneurs who will not be as funded as you are, and maybe slightly early journey as well? So what should they do in this scenario?
Yeah, so if you are, there are there are multiple, startups which are there. So this is more, I'm answering more to relevant audience, which is fintechs and few others, right? So first and foremost, please remember that the journey ahead for early stage fintech would be very, very hard, right? Uh, now you have, which means that a lot of founders have to take some serious thinking around how they will, carry on. And there will be what we call a mortality rate of X percentage, which will come into fintech, and I
I
have no
agree.
doubt
I
about it.
totally agree.
Yeah, it may sound very bad to look at, but that's hard reality. And this hard reality is because, the people who provide capital have no emotional connect, right? They do it only for, financial reasons, and they will be very nervous to put capital out at this point of time. I think so. If you can, if you are really motivated, and if your motivation is towards your mission and not just money, then stick with it. Hold on for now. Reduce your cost as much as possible. Try partnering with a larger player, and whatever, what you have built, let somebody else take the benefit of that. But if you have just, so there are two types of interview one who do it for trying their leg. If it succeeds, good enough. Otherwise, I'll go back to my normal, right? So if you're in that category, it's time to go back to your normal, which is pick up a job, do something. But if you're really passionate and you really believe, just hold on to it. My view is that in 6 months' time, you will see a massive reversal which will come. And then some of the startup would benefit from that very, very quickly, because there'll be so much of liquidity which will get flushed in the market, because governments would push so much of money around the world. There'll be excess capital, economies need to be revived, capital is the only way to do that. So you'll see in 6 months to 8 months time a massive revival happening, so wait for that time to come.
Okay. Okay. And maybe the last question, in terms of any positives you would like to, I mean, people can focus on this pandemic side. Anything positive which has come out, which people should look at and focus on?
So my view is that uh, rather than which is we are doing right at this point of time, for first time we are saying that are there businesses which we should look at in terms of collaborating or consolidating, right?
Exactly.
Yeah.
Exactly.
So we are doing that. So there are 5 people which we have reached out, and they said, oh, this is very bad time and all this. No, it's not bad time. This is the time where I have the luxury of time and bandwidth, you have to, can we not look at this, right? So I think so, rather than fretting over that, it's a bad time and this has happened, at least, we are not in that. If you are alive, you are eating your food and you are with your family, thank thank to the god that you are not in part of that 3.5% which is dying every day, right? So thank god for that, and then use this time to think strategically that once this is over, and this shall be over, what you will do differently, and so that use that time to do what I call deep strategic thinking. And as much as you can do that, you will come back and bounce back faster.
No, I agree. I agree. I think we all have been sort of fighting. The first 1 week was tough, but interestingly, one of our client wanted to start an accelerator. We are finally most probably kicking off in next couple of weeks. We were doing something which is API accelerator with one other entity, few partnerships, and also I think what we realized is first 1 or 2 weeks reaction was very different.
Yeah.
So many of them have come back and starting it off because, as you said, it's easier to get time from the top management in all the organizations because
Yeah.
they are now looking at forward thinking activity rather than just doing BAU. They're no longer chasing sales as much as they used to, and now suddenly CEO has come back from a sales guy to strategy guy back, and hopefully that will change the
Yeah.
whole environment.
Yeah.
Yeah.
Yeah. I
So,
agree.
all right. So thanks, Sajid, for this sharing this
No, Tamir,
insight. I
thank you.
think.
Thank you so much. Thanks for taking your time and speaking to us.
Thank you, and looking forward. I think once things have come back, my office is very close to your office, so we'll
Okay.
come back and meet you as well.
Sure. Sure. Thank you.
Thank you, thank you.